one rental at a time. Lots of you ask about my puppies, so here is their 10 seconds. Do me a favor, give me a like or a comment for Happy, or for Sunny, or for both. All right, guys, there you go. Go have some fun. All righty, folks, it is May 10th. This is your daily financial news. This is a news show that we have been bringing you for, yes, more than 1,000 days in a row. Go back and look at the playlist, see what we were talking about. It's something I had been doing for the better part of 30 years, reading. The only difference now is I take notes on what is going on. I think it's important to follow the consumer, the cost of capital or the cost of money, and figure out what is going on in the economy. Because yes, we are still growing. We are still looking to do more and more deals. So I just come back and tell you what is going on. First and foremost, if you are not following Rick Palacios Jr. on Twitter, you are missing out on a gold mine of real estate information. Do me a favor. If you want great real estate information, give Rick a follow and tell him that One Rental at a Time sent you. He has been on my channel a couple of times, and we want him back. So, Rick Palacios, Palacious Jr. You will see in a minute exactly what I am talking about. Then we have a YouTube channel, a very large YouTube channel, not named Meet Kevin, but still a very big channel that is bemoaning the real estate market, talking about ARK-K and Shopify and all of these tech stocks that are losing money and it's not fair and getting clobbered and all of that. Well, what I would like to tell folks is the market today is far more normal than the last 2 years. What you had just went through the last 2 years and got lucky is not normal. The Fed took interest rates to zero, and you thought you were a rock star investor because everything went up. Companies should not be priced on revenue. It should be priced on earnings. And I thought it was very unfortunate that this very large channel was basically upset that risk is being recalibrated. PEs are being recalibrated. We are entering a far more normal market than the last 2 years. I think telling your audience that the last 2 years was normal and today is not is misguided. And I found myself getting rather upset at that channel. So I don't know. The things that I go through trying just to get a little bit better every day. Next, Peloton. Woo! Remember, folks, we have brought you a concept called burn rate the last couple of days. And here is a great example. Peloton. Let me make sure I get the numbers right. First and foremost, missed top, missed bottom, gave weak guidance. And they actually said they are thinly capitalized, which means cash poor. For example, they have $879 billion in cash or cash equivalents. You might be asking yourself, Michael, they got almost $1 billion. How can they be cash poor? Well, they lost $757 million last quarter. So in one quarter, they lost almost as much as their cash position. Peloton needs a loan. They need to go sell themselves. They need to do something. They are in huge trouble. This will go down like WeWorks. It's like not good. And then the housing slowdown is real. I want all of my students, all of my followers to know that I am seeing your posts. I am watching you. Just in the last week, you are posting things in our private Facebook group. Hey, house at 350 just dropped to 289. Hey, house at 189, 155. You are writing great offers. I am very, very proud of you. Last year, all of us, investors, owners, had to write at asking minimum. Those days are over. Throw that memory away and understand you, the buyer. Buyers have more power today than we've had for 3 years. Do the work. Today, It is about having a buy box and looking at it 20 minutes a day. All of you that are doing that, you're winning. You may not have a deal yet, but you are so close. You are winning. I am proud of you. Please keep it up and keep posting in the Facebook group. When one of you sees a deal that goes from 350 to 289, others see that. Others get excited. So please keep posting. Please keep supporting each other and just keep doing the work. The housing slowdown will happen kind of like this. Demand has cratered. Supply will come on. Days on market will expand. Pending or actives will go up. They will. The question is, what percent of actives will be wish pricing and thus removed? Not all active listings sell. We actually could be entering a time where 30% of active listings do not sell. How can that be? Well, as an owner, you have put your property on the market. If you don't get what you think is a fair price after 90 or 180 days, depending on your contract or your listing contract or listing agreement, you will take it off the market. So we are going to see listings explode. The question is, how many of them are truly sellers, or what you and I are fishing for, motivated sellers? Without question, housing slowdown is real. It is happening, and it will happen increasingly going forward. We are going to see active listings grow. You'll see some numbers here in a minute. Actually, we'll go there now. Active listings, actually year on year, as of last week, we're still down 12%. That's hard to believe. Even though interest rates are up 250 basis points, active listings are down year on year, 12%. However, when you zoom in on the data, you finally see a trend where week on week it is growing. It is slow, it is slight, but I have been doing this a long time. They are coming. They are coming. I just don't know how many will be truly motivated versus, hey, if I get my number, I get my number. It's going to, I said it before, I will probably say it again. The Fed broke housing. I saw an interesting stat yesterday as Bitcoin went under $30,000, down 50 some odd percent. Apparently, 40% of people who have bought Bitcoin are underwater. I find it very interesting that it's A, not a non-correlated asset, and B, it's not inflation hedged. These are all things I have been told for years. Apparently, it is not true. AMC still losing money. And that is on the back of Spider-Man and Batman. AMC still losing money. They lost 65 cents a share. Crazy. Upstart. Wow. Missed earnings week forecast, probably down 40 some odd percent today. Again, a money losing business. Burning cash. Not a good place to be. Be careful. And again, back to this YouTube channel. You should be hurt if you are losing money. You're not supposed to be paying for negative earnings on large growth. That's not the way to do it. There will be a video, I think it came out yesterday, from one of my experts. Taylor, this is for you, buddy. You think that the CPI tomorrow morning will be less than 7%. I admit that is possible, but if you saw that video, I was taken aback. I'm still going to call 8.2. I think he called 6.8. What do you guys think? Take a shot. Do you think CPI crashes below 7% tomorrow? We will know in less than 24 hours. I was shocked. Taylor, if you get it tomorrow, kudos to you. That was a ballsy call, in my opinion. It has now come out from, let me see who did this report. It's Federal Reserve of San Francisco. Federal Reserve of San Francisco put out an interesting report. They said that stimulus checks and helicopter money resulted in 3% of our inflation. Folks, I have given you many drawings, many pictures. Raining money on people just is inflationary. Inflation is and has always been a monetary phenomenon. Too much money, chasing too few goods. That's why the last 2 years, the stock market has done stupid things and crypto has done stupid things because there was all these money with people still working and not traveling and not spending and put money somewhere. It was very interesting to see that the Federal Reserve of San Francisco said that. Again, back to this YouTube channel, what I would tell him is you need to understand the Federal Reserve. The Federal Reserve took risk to zero. When risk is zero, insurance companies, Wall Street, big money investors, they are happy with 3, 4, 5, 6% return. We are entering a market where risk isn't zero. Cost of capital isn't zero. Of course, it has to reset. The market we are in is not fun, but we have now left the party and we should have a hangover because we were drunk. So I want you to understand now is a far more normal market than the last 2 years. If you are hoping for the last 2 years to come back, I don't have good news for you. The 30-year mortgage I saw yesterday, 5.6%. Wow. The 10-year note did break 3% this morning to the downside. Don't know why that is, but it did break. It was as high as 3.16, I think, 3.15. It's now 2.95, I believe I saw this morning. What else do we got? Bank of America must be watching this channel. Bank of America said, hey, the next 6 months are going to be uncomfortable, uneasy as the bear market gets teeth and claws. We will get out of it. Bear markets are faster than bull markets, but get ready. As I say, get your shopping list, know what you want, and move in. Now, on to Rick Palacios Jr. Again, you want to follow him on Twitter. Here is what he said about 7 or 8 builders. They do this monthly survey of builders. Go to his Twitter feed. You will be amazed. I took some of them. Tampa Bay builder. Last 30 days, buying has stopped. Actually, let me summarize first. 3 things from their April builder survey. 1, demand is slowing at the entry level. Think about that. 2, investors are pulling back. And 3, the move up market is feeling the pinch. This is important stuff. So Tampa Bay, last 30 days, buyers have stopped. Indianapolis, traffic, significant decline, and people are backing out. Dallas, interest lists are shrinking. Houston, first-time buyers simply don't qualify. San Antonio, traffic cut in half. Raleigh, investor demand stopped. Riverside, California, buyers not qualified or buyers lost jobs. Think about that one, huh? And then Kansas was the last one I wrote down. Lower end product has slowed dramatically. First-time home buyers, trouble. I believe as this picks up steam, the giveaway administration will do more first-time homebuyer programs. We will have a 40-year product as a standard and backed product by FHA, Fannie Mae, Freddie. I think it is coming. We shall see. They will give down payments to people, just like I think California started giving away down payments. Crazy stuff. Last couple of earnings. Let's talk about Vroom. They beat top and bottom and announced a restructuring. Folks, burn rate. These companies that are losing money, you are going to increasingly hear, we are restructuring. And Wall Street will see it as a good thing. Vroom says we are going to basically whack, cut, lay off 270 jobs. They need to right-size their burn rate so they have a longer runway. Watch this happening over the next 90 days. And then finally, someone who likes to cruise and hasn't been on a cruise in several years, Norwegian Cruise Line came out and beat top, beat bottom, and said, Summer demand for cruises is above 2019 levels. Folks, it is May 10th. Follow Rick Palicio's YouTube channel is talking about finance. I want you to understand, yes, I understand you haven't been through a bear market. Yes, you've only been investing for 5 years. Yes, it's been a bull market. It's over. What you are entering now happens. Bear markets happen. I know they're not fun. I know you want to wish for yesterday. Doesn't work that way. Peloton, cash poor, more and more companies. See what Vroom did. They are going to whack heads, have higher layoffs because they need to right size their burn rate so they can survive. They need to lengthen the runway. Borrowing money today is expensive or impossible. So they need to extend. And then finally, the housing slowdown is real. We are going to see listings go up going forward. We are going to see price drops. And if you're one of my students, your job, be very careful here. Your job is only write great offers. If they counter and you want to accept a good deal, fine. That is your call. But what we are doing today and going forward is only writing great offers. And if you're one of my students, you know what that means. If you don't, check out the YouTube channel, go to my website, whatever you want to do. But that's what we talk about. Understand average, do good or great, daily discipline, buy box, all of these things to make sure that we are taking advantage and we are getting some great deals from motivated sellers. Have a wonderful day. It is Tuesday, May 10th. Let's go make some money. Bye.